I'm planning on investing 100K in Feb into Tesla, MicroStrategy, and Solana 50-30-20 split. Would you advise a lump sum or DCAS? And if lump sum, what price would you enter at? This is such an important question. And in summary, it really varies on the market conditions we are in, because right now is a great opportunity to snag a little bit of stuff. We are way off prices where they were 2 weeks ago, but we're also at the same level we were a month ago. And that's just the crazy volatility of where we are. So let's talk about a couple of things. First of all, when to lump sum. Now, there is math behind this. And historically, lump sum investing tends to outperform dollar cost averaging about 70% of the time if you're early in the bull market. So imagine you got 100 grand and Bitcoin's at 15,500. You don't DCA it. If you got 100 grand, you just drop it all right there. Boom, lump sum. And then it's much better than DCAing. But if you are mid to later in the bull market, then you don't do that. But other reasons why you would lump sum is if the trend, and I'll kind of share a very crude chart, if you believe the macro environment and the trend for things like Tesla, MicroStrategy, and Solana are bullish, entering sooner might be better. But the risk is, if the market dips, you experience a kick in the teeth. And sometimes humans actually feel worse, losing something than missing out on an opportunity, and some are the other completely way around. So let's get into it. So when do you DCAS? And this is kind of more relevant to you right now because we are kind of later in the bull market. But the DCAS approach spreads out your entries over time, reduces the risk of mistiming the market. So for example, you could have bought Bitcoin at 108K the other day, or today at 97K. That's quite a difference in price. Or we had Solana go to 256, and then it fell all the way to 194. And that is a big swing just in a matter of weeks. So timing the market, again, using DCAS, it optimizes your entries over time. And if you are uncertain about short-term price action, expect volatility. And what you could do, what I would do, is break your 100K into a bunch of different tranches, maybe 4 to 6 tranches allocated to different assets over 6 to 12 weeks, and let the market dictate. What I do is I let the market tell me what to buy, when to buy it. You could be looking at 4 different assets, but one falls into your trap before the others, and then you allocate to that first. Now, another way to look at things too, and this is where it gets a little bit tricky, and I tried to put together a very crude chart to represent the markets and how they work. So imagine we're trying to time 2025. The gold line is Bitcoin, and the red line is Tesla. Okay? Now, I could be wrong in this, but we shall see. And there are no numbers attached. But if you imagine, I do believe Bitcoin is still very much in a bull market. Despite what you read on crypto Twitter, everybody thinks Bitcoin's already in a bear market, all because of tariff talk. But when you've been around tariffs and seen cycles happen many times, you'll know very quickly it's a nothing burger after a very short amount of time. Okay? But it's these panic opportunities that give you time to get in. So let's get back to this little chart. Again, it's super crude, but it's what I believe could happen in 2025. Red is Tesla. I think we could chop sideways until the later part of 2025. At least I hope we do. And I think Bitcoin will go on a rampage up until October. So if you imagine this being the full 2025 calendar year, that's what I think could happen. But the most important thing to note is that big green arrow, the delta between the two assets. You have one asset going on a rampage and the other one chopping sideways. And then you rotate. And then you get your crossover point. And that is the magic of really what you need to consider. But it's extremely difficult to time. But let's look at the last couple of years and show you what reality actually looks like looking backwards. This is what reality looks like. I threw down my big holdings here. For those of you who know me and the channel, I'm heavy in MicroStrategy, and I have Solana, heavy in that. I have Bitcoin, heavy in that, and I have Tesla. In fact, these four assets make up over 90% of what I have. Okay, that's it. But if you look at the returns since 2023, MicroStrategy is up, coincidentally, 2,300%. Solana's up 1,875%. Bitcoin's up 485%. And Tesla is up 229%. So when you put a small amount of money into an asset like MicroStrategy and then it blows up, your allocations also blow up, which messes things up a little bit. And we'll talk more about allocations in a minute, but that's what can happen. But you also always have to balance risk and reward. And it's very, very difficult to time these things. In fact, let's go back to this chart for a second. And if you look at the two lines, you've got that reddish color and the purpley color. They sometimes follow each other, but sometimes they don't. So Solana kind of follows Bitcoin, but Bitcoin definitely follows MicroStrategy or vice versa. But sometimes they don't follow each other. And that's what you need to take into account as well. Again, when it comes to timing the actual market and your entries. So wait for things, to lay your traps, have a process, because we're not early in the bull. I wouldn't imagine going lump sum is a good idea. We have to see how this tariff stuff shakes out, and that could bring about some very good buying opportunities. Many of them could hit first thing Monday morning. We'll be ready. And that's it. But there's other questions that are kind of tied into this, so stay tuned for those too. But remember, sometimes it just takes one winning trade to be completely life-changing. Or you can get a few of them too, which is also nice.